In this video, we are going to talk about how to make money from dividends. So before starting this video, please like this video and subscribe to our channel for future updates. Dividends are regular payments of profit made to investors who own a company's stock. Not all stocks pay dividends. Dividends are payments a company makes to share profits with its stockholders. They're paid on a regular basis, and they are one of the ways investors earn a return from investing in stock. If you are interested in investing for dividends, you will want to specifically choose dividend stocks. Here's a list of the ways to make money from dividends. Let's start. Decide how much stock you want to buy. You need diversification if you're buying individual stocks, so you'll need to determine what percent of your portfolio goes into each stock. For example, you're buying 20 stocks, you could put 5% of your portfolio in each. However, if the stock is riskier, you might want to buy less of it and put more of your money towards safer choices. If you're going to reinvest your dividends, you'll need to recalculate your cost basis, the amount you originally paid to purchase the stock. How to invest in dividend stocks. Building a portfolio of individual dividend stocks takes time and effort, but for many investors it's worth it. Here's how to buy a dividend stock. Find a dividend-paying stock. You can screen for stocks that pay dividends on many financial sites, as well as on your online broker's website. Evaluate the stock. To look under the hood of a high dividend stock, start by comparing the dividend yields among its peers. If a company's dividend yield is much higher than that of similar companies, it could be a red flag. At the very least, it's worth additional research into the company and the safety of the dividend. Investing for income. Dividend stocks versus dividend funds. There are two main ways to invest in dividend stocks: through mutual funds such as index funds or exchange-traded funds that hold dividend stocks, or by purchasing individual dividend stocks. Dividend ETFs or index funds offer investors access to a selection of dividend stocks within a single investment. That means with just one transaction, you can own a portfolio of dividend stocks. The fund will then pay out dividends to you on a regular basis, which you can take as income or reinvest. Dividend funds offer the benefit of instant diversification. If one stock held by the fund cuts or suspends its dividend, you can still rely on income from the others. Dividend payout ratio. Advisors say one of the quickest ways to measure a dividend's safety is to check its payout ratio, or the portion of its net income that goes toward dividend payments. If a company pays out 100% or more of its income, the dividend could be in trouble. During tougher times, earnings might dip too low to cover dividends. Generally speaking, investors look for payout ratios that are 80% or below. Like a stock's dividend yield, the company's payout ratio will be listed on financial or online brokerage websites. Yield and stock are inversely related. Yield and stock price are inversely related. When one goes up, the other goes down. So, there are two ways for a stock's dividend yield to go up. The company could raise its dividend. A $100 stock with a $4 dividend might see a 10% increase in its dividend, raising the annual payout to $4.40 per share. If the stock price doesn't change, the yield becomes 4.4%. The stock price could go down while the dividend remains unchanged. That $100 stock with a $4 dividend might decline to $90 per share. How to evaluate dividends. An investor can use different methods to learn more about a company's dividend and compare it to similar companies. Dividend per share, DPS, as mentioned above, companies that can increase dividends year after year are sought after. The dividend per share, DPS, calculation shows the amount of dividends distributed by the company for each share of stock during a certain time period. Keeping tabs on a company's DPS allows an investor to see which companies are able to grow their dividends over time. How often are dividends paid? In the United States, companies usually pay dividends quarterly, though some pay monthly or semi-annually. A company's board of directors must approve each dividend. The company will then announce when the dividend will be paid, the amount of the dividend, and the ex-dividend date. The ex-dividend date is extremely important to investors. Investors must own the stock by that date to receive the dividend. How do stock dividends work? A dividend is paid per share of stock. If you own 30 shares in a company and that company pays $2 in annual cash dividends, you will receive $60 per year. There are many types of dividends. Usually, dividends are paid out on a company's common stock. There are several types of dividends a company can choose to pay out to its shareholders. The most common type of dividend is cash dividends. Companies generally pay these in cash directly into the shareholder's brokerage account. So this is our today's video. If you like our video, don't forget to subscribe to our channel or hit the bell icon. We will meet again with another interesting topic. Till then, stay safe and stay happy. Do not forget to check out important links found in the description of this video.